Hello, Dennis Smith, Stratus Financial on Wednesday, the 27th of July. And what you're looking at is the U.S. debt clock. This is the total debt limit that we have. That's the debt that's subject to the limit, and this is what the total debt is. So we're already over the limit. Um, but that's financial wangling and finagling in Washington. Total debt is almost $55 trillion, 54.9 trillion. Look at all those commas. Here's our debt to GDP ratio, and here's our revenue to GDP ratio, and here's our spending to GDP. So basically, right now we are spending 46% of our total gross domestic product. That's not just what the government receives, that's what everybody makes in the United States is being spent to cover the debt. So this is what they're arguing about. Here's our gross domestic product. Here's our national debt. Between the two, you can see that the national debt almost catches up to the GDP. So they've been arguing over this, and what has that meant for everybody? Well, here's the stock market the last several days. You can see from last week on the 21st, it did pretty well, and then it's been going down, 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 down. Today was a big day. It lost, as you can see up here, almost 200 points on the Dow Jones. This little fine line that you see here, this is the yield. This is the interest rate on 10-year Treasury notes. And you can see that it's gone up quite a bit. It's gone over 3% since the debt negotiations got more and more and more cantankerous between the White House, the Senate Majority Leader, Democrat Harry Reid from Nevada, and the House Speaker of the House, Republican John Boehner from Ohio. What does it mean to you that are looking for mortgages? Well, here's the last 10 days. And what I want you to look at here are two things. One, remember red arrows are bad. That means prices for mortgages drop and that the interest rates go up. So as this goes down, rates have been going up. But look at the big, huge trading ranges that have been going on every single day practically since this started. On Friday, there was a huge amount of trade, and it ended up being just pretty much flat. It never moved from opening to close. It was the same price. And then here's today, another big range. So the volatility is definitely in the market. If we look at the last month, we were kind of trending sideways, but we're trending sideways down. We hit our recent highs, which would be low in interest rates, on July 12th. July 13th was close, but this is our recent high. We broke over this 101 line, stayed there, and since then we've been kind of drifting slowly down in price, which means we've been drifting slowly up in rate after this big, huge drop we had at the very beginning of the month. Taking a look at the 3-month cycle, here's our pattern now once we jumped out of this pattern, but we've been in this kind of downing, trending pattern. And until they get the debt resolved, that's pretty much what we're looking at. Rates are volatile. They are tending to move up as investors are putting more and more of their money into cash. As you can see, if we can put these charts side by side, see if I can figure this out. We have stocks that are going down, and we have rates that are going up. So that's our news today. It's not great news. If I can help you, please give me a call. Dennis C. Smith, 562-243-6912, or you can find me at denniscsmith.com. If I can help you with your mortgage questions, help you get pre-qualified, refinance, whatever I can do for you in the mortgage business, please do not hesitate to give me a call. I hope everybody is having a great day and has a great rest of the week.